What is up, Al Maria? It is John Barr with Prime Homes. Sorry I wasn't able to make it tonight, but I had a little bit of conflict in the schedule. But I wanted to make sure that I got the market report out to you because I get a lot of feedback every month that a lot of people really like this and find it very informational. So I know we're short on time, so we will go ahead and just get right into this. August number reviews. Average sales price was just over 252,000, which was a 2.47% increase year over year. The median sales price did go back up another 2,000 to 207. That's a little typo there, but was still a 3.5% increase year over year. Total sales just under shy of 3,000, which dropped off a little bit from last month, but we are still up 2.9% increase from last year. Rental price rebounded this month to just under 1,500, which puts at a 2.7% increase year over year. Employment, we gained some jobs this month. We're up just under 3,000, just to over 1.1 million jobs, which is 1.21 increase from this time last year. Unemployment dropped to a 3.67, so that's good. Like I said, it was a 0.22% decrease from the previous month, so that's what you'll see with these job creations, what that's going to do. Month's inventory also dropped, which shows that we are still in a very, very strong seller's market. Anytime that we're below six months, which is the balance between buyers and sellers, you're going to have upward pressure on pricing because it means there's a high demand for properties. And we'll get into later that shows what zip codes have the highest demand, which means there's going to be a lot of price increases. But I mean, the month's inventory didn't drop off a whole lot. It was 0.03 decrease from the previous month. So now you can see the median sales price priced over since July of 2010. And what I really always look at that's different in 2017, which is over here, compared to the rest of the other years, is you can kind of see everything kind of rises and then falls off gradually, kind of falls off. So it's kind of a roller coaster. I had a little bit of a blip here. Same thing here. And you can always see this is basically always going to be your January time frame. It's going to come down, spike in December, drop off in January, then rise up, and it's a smooth transition down. Now, this was December of 2016, and this was January. What I saw here is it rose, then it dropped, then it shot up really fast, dropped down significant amount by $10,000, and then it rose again. So 2017 is kind of showing that it's not being as a stable rise and fall like it has been the last several years. You can see that it just kind of follows a nice consistent curve, but 2017 it changed a little bit. Monthly rents, same kind of thing. It kind of shot up, dropped off, and now it's risen to the highest point that it's ever risen to in the past. One thing you can take this for all the landlords out there is your summertime, that's when you're traditionally going to go to get the highest rent. So make those leases end about the April, May time frame so you can really kind of push those rents up a little bit. But I mean, one thing I'm continuing to watch is what is the long-term effect of going to be where these years that were just smooth, consistent rises and falls, and this year it rose up, dropped off, and now it's rising again. So I don't know what caused that, but it's something that we're going to continue to watch to see if it continues or not. 20-year unemployment. So you can see that we've just been bouncing around in the bottom here, roughly between 3.5 to 4.25. So that's been going on for a significant period of time. I want to watch this because if I start seeing that month's unemployment starting to rise, that's a concern that jobs are being lost, and I would start to see real estate prices affected by that. The people are moving here, not finding jobs, or the people that are here are losing jobs. That shows that the business cycle is starting to contract, and I would expect to see real estate prices start to follow that. Now, one of the most popular areas is where to market to find the best chances and the highest demand for buyers. So this is if you're buying a house and it's got low months of inventory, that shows there's a high demand for buyers wanting homes in there, and it's also a good chance that prices and rents are going to continue to rise. So I do it on a couple different matrices by price range. So you can see here I go by $50,000 increments until I get up into here to the 400 plus. But you can kind of see that basically everything under a 400,000 price range is still in a seller's market. But as you get down to these lower price ranges, especially under the 250 and the 200s, you're really getting low on inventory here in the city. There used to be a much bigger gap between the 200 and 250 and into the 300s, but we've seen that gap really start to close lately. Over time, these are being much more consistent of rises. A lot of inventory, a lot of people, investors are doing good jobs. They are renovating houses. They're pushing these prices up, and there's a lot of demand from buyers in these areas, which is making properties go up. Excuse me a second. So now by zip code. This is where you have the best zip codes that are having the lowest months of inventory in the city. I picked zip codes that have at least 30 active homes that have been for sale in the last month. So you can see the average prices are, no surprise, they're all pretty much under the $250,000 mark. But one thing I went ahead and went back, now that I've been doing this for a year, I went back and really compared, because I'm seeing a lot more of these $200,000 lowest months of inventory across the city. There's 5 of them this time in the 200,000, and 78216, which is down by the airport North Star Mall area, is almost a 300, and it's the top 3 in the city. So prices have really changed in our city in the last year, and this kind of really goes to show it. So this is the area. These zip codes are where you're going to see a lot of upward pressure from a buying standpoint for prices to increase. So it's something that you can do to target your marketing, or if you hold properties in there, you might think about selling them, knowing that you're getting up there, the values are really starting to climb if you got a substantial amount of equity and you got a better position for it. Now, the worst zip codes, no surprise that they are all pretty much in the higher price ranges, except for 78222 and 78210. Now, what I'm kind of seeing here is 78210 is just southeast of downtown, pretty good sized zip code. That has got an average sales price of $181,000, and that has usually been some very low housing stock, and as far as like a price point, but it's really shut up drastically, and there's a lot more homes that are being renovated and put on the market. Even though it still has a high months of inventory, a lot of properties are on the market, not a whole lot of people are buying, but they are rising, and it is starting to come on the map where traditionally we hadn't seen it at all. So this is something that I want to kind of continue to watch, and things that I'm kind of seeing here in our local market. Now, that really concludes it. If you guys have any questions, please shoot me an email. It's john@primehomes.com. If you have any comments, feedback, or would like a copy of the PDF of this slideshow. And that really concludes it. I hope you guys have a great night, and I will see you guys next month.